Good morning, ladies and gentlemen. This is Butch Shorak. It's Options University, and it's Friday, July 20th, 2012. Access to this webinar or video is for educational and informational purposes. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we are not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. Here we are, we're in the third week, option expiration week of the SPX of the month of July. First months of a quarter tend to be the stronger months of the quarter and usually open to be somewhat bullish, and we see that as we look at the first month of the quarter. We're basically exactly where we started at the beginning of the quarter. We've had our dip where we've pulled back, and we see now that we have been in an up cycle. And as we look at our overall trend, we broke out getting higher highs and higher lows. There's a high, there's a high, there's a higher high, and we're at a transition point as we look at this Friday morning of options expiration week, and we see that we could break out of this zone and head to higher highs, continuing the upward trend in the market. The next trend, of course, after an upward trend is a sideways trend, and so far we are trading in basically our summer trading zone. And we're going to find out whether we're going to break up and head toward previous highs, that previous high being up there right around 14.10, 14.15, which we see from this point right back here. So, current trend of the market, we are in an uptrend. We're getting higher highs, so we're getting higher lows, and we're approaching those highs which we saw earlier in May. Transition point today on Friday, are we going to go higher? Are we going to go sideways? Or are we going to begin a downward cycle in this upward trend? And will the upper movement continue on the lows as we keep getting higher lows? And so this first month of the quarter has shown to be a strong month, and typically you'll see in the market that the first quarter of the month ends up being a stronger month. Let's look in particular at the week that just took place, and we'll expand our chart a little bit as we look at it. And here we see we had 4 trading days so far. So we had a huge day last Friday, and then what we saw is we continued after that breakout, and we had our pivot here where we changed direction into an upward cycle, and we see that each of the days during the week so far has been a nice upward move, and we're currently sitting at resistance. So now the question is, what's going to happen on this Friday options expiration week? And again, utilize that signal which we use so often, that is that opening range which takes place in the first hour. Are we going to trade above that opening high of the first hour, or are we going to trade below that opening low of the first hour? And use that as an indicator for your Friday trading as we go into this summer weekend. Alright, so the SPX, nice strength this week, Monday, Tuesday, Wednesday, and Thursday. All nice strong days in option expiration week as we come up to our previous highs that were here at the beginning of July. If we talk about July so far, where have we gone? Absolutely nowhere. With that in mind, let's move on, take a look at some of the other indices and see how they've fared compared to our granddaddy index, the SPX. Looking at the Dow, we see that we have exactly the same pattern. We've been in a nice little bullish movement. We're in an upcycle, and you see that we are basically sitting at that same high that we saw back there at the beginning of July, basically going nowhere so far in the month. But holding our own in this first month of the quarter, which tends to be a bit of a bullish month anyway, so we could certainly see higher highs based upon past history. Now, when we look at the NASDAQ, we see the NASDAQ looks exactly the same. Had a kind of a wild day here on Tuesday, where we had an outside day, and that did occur during this week, showed us a lot of strength and showed us that underlying power of the bulls that took place during this last week. Next, let's take a look at the Russell 2000 and see that this market is lagging a bit as we look back and we look at the beginning of July. We see that it is lagging and not keeping up with the other indices, and gave us a big red candlestick on Thursday. Many times the NASDAQ can be a leading indicator for these pivot moves. So watch that opening range this morning and use that as an indicator for where the market's going on this option expiration day. Next, let's take a look at the VIX, and we see that as we go out into an upcycle, we're trading at the very low range of our yellow zone on the VIX as we're pulling back, and a lot of the fear is out of the market as the market rises, and that is to be expected. Again, back in our normal zone between 20 and 15, where the VIX trades approximately 15% of the time. Remember, this is our fear index, and we're interested in the extremes, and the fear is coming a bit out of the market, so we are basically due for some kind of movement up in the VIX, which would of course mean that we're getting a little overbought in the overall market. All right, next let's take a look at some of the ETFs that we look to follow some of the other sectors, and we see that the bonds have been holding very strongly as the bond market in the last year and couple years has really outperformed expectations, and we see that we're very near the high of our range for the bonds, and as if the market begins to pull back, we could see these bonds actually move a little bit higher as we could break out of that trading zone. So you could watch that carefully. Looking at the XLF, which is the financial sector, we're in the midst of earnings season, and the financials have been returning very nicely, certainly beating in general the expectations on earnings, not necessarily beating the expectations on revenues, which seems to be a bit of a pattern as we're about a week and a half into this current earnings season. Financials looking strong at the very high of its current range, and we will need a breakout in order to get higher highs out of the financials as we are still trading in our zone. Next, as we look at oil, we see that oil has been rallying as the dollar has been getting weaker, and we see that we have broken out of this previous low area that typically we don't see during the summer, when we usually see a seasonal rise in the price of oil just so that they can make a little more money off the summer travels. All right, that gives us USO, the ETF that we look at to help us trace oil. Next, let's take a look at that ETF for gold, and we see that we're trading smack dab in the middle of our summer trading range. Been trading here since May, and so one of the things you might look at is a potential condor looking at oil, or looking at gold as it trades in this zone for the summer, and probably will stay there until it changes. And will it change? Yeah, of course, it always changes. But meanwhile, it looks like a real potential for possibly an iron condor. All right. Next day, let's take a look at the spider, see that it is following in the same movements that we see out of the SPX, but it does allow us to add one little analysis to our overall analysis, and that is what kind of volume. And we're in our summer doldrums, where we see that our volume is basically right around average. No big movements there as far as volume as we continue through with our summer trading. So the SPX this week has had a nice strong week, getting up to previous highs, finishing into auction expiration week approximately where we started the month, and we see that we have basically about the same position as we had at the beginning of the month, and getting a bit overbought, and we unless the trend changes and we move into a breakout, we should see this retrace back, and we'll then see whether we get a breakdown from our upward going diagonal and come back down to some lower lows. So that we're kind of in a flux point as we enter into this Friday of options expiration, and it's great having you here with Options University. And for those of you that are gold members, we'll be looking at our stocks to watch and see what they've done during this bullish week in options expiration week of 2012. So to those of you that are not gold members, we look forward to seeing you when we come out with more news again on Monday, looking at the week to come. And if you'd like to see more free videos, go to www.optionsuniversity.com/free gold. With that, this is Butch Shorek. It's Friday, July 20th, 2012. Options University appreciates you being here, and thank you. This is Butch Shorek. Welcome back to Options University for all of our gold members. Let's take a look at the week that just took place. As here we are in the third week of July. July tending to be a strong month as our most first months of the quarters. And we see that we've had a nice little pop in the market in a very, very nice trend. We've been in it 1, 2, 3, 4, 5 days. Typical move in the market occurs over a 5-day period. We tend to see a market shift after 3, 5, and 7-day runs, and so we're at a transition day as we go into this Friday. You see that we have moved up through many of the support levels that used to be resistance levels right through here during this last week. Our next resistance level is up at 1386, but we're currently sitting at 1376, which is a resistance level. It would be interesting to see if we can pop above this level on options expiration day. At the very least, we should probably see some kind of sideways trend, and if we stay in the current trend, we could get a higher high. My thought is that we may do some retracement here, as there's not a whole lot moving the market at this particular point. We are definitely in earnings period, and the earnings basically are coming in quite nicely. Typically, many of the companies are beating the expectations as far as earnings are concerned, but are having a tendency to miss as far as revenues. Stocks finished on Thursday evening with modest gains, and basically all we had was disappointing economic data on Thursday. But earnings reports saw what I had discussed before, that we saw bottom line beating expectations and accompanied by those top line or revenue misses. Every economic data that we had on Thursday basically fell short of expectations. We saw that home sales that disappointed, the Philly Fed disappointed, leading indicators missed its mark, and our weekly unemployment numbers were worse last week than expectations. And in spite of that, what did the market do? S&P rallied. And so we want technically to get up to that next level, and we'll see whether this underlying bullish movement continues higher or not. Notice the size of our candlestick on Thursday was smaller than the other candlesticks that we saw during the week. So we may find some resistance at this point. As talked about in the earlier video, look at that first hour high, the first hour low, to give you an indication as to where the market's going to move on this option expiration day in July, already halfway through the summer as time has moved. And in South Florida, we're getting ready for lobster season. All right, with that, let's take a look at some of our stocks, see how they responded, as many of them are headed towards earnings. And we see that Amazon, with earnings on July 26th, finally had a huge day, was not responding the rest of the week to the overall market going sideways, and finally Amazon had a 4% move on Thursday going into options expiration week, headed for that previous high up there at about 230. And remember, we do have earnings coming, so we could get a little earnings run here out of Amazon if the overall market does continue in this upward path. definitely a buy signal on yesterday for Amazon. A little overextended at this point if you were not watching this stock. Looking at Apple, we see that it is headed towards earnings, which are on the 24th of July, not very far away, and we see that if the market does break out, we certainly could get a breakout in Amazon as it's very near the high of its current range. Notice Apple has done nothing but go sideways, and we have not seen the typical earnings run out of Apple that we've seen in previous quarters, as it seems that Apple finally hit its saturation point, trading sideways within quite a narrow range, but certainly has been in an upward trend since basically around June 21st. All right, and after we see what Apple has done, let's go take a look at another stock that's shown a great deal of pop, AutoZone, and we'll see that AutoZone basically had its big pop last week and has basically gone nowhere this week, as we see the 30 and the 50 congealing upon each other well above the 200-day moving average, but AutoZone sticking within its trading zone. Certainly could expect it to pull back if the overall market pulls back, and not quite yet heading into any big earnings run with AutoZone, as its earnings will be a bit further off. Next, let's take a look at CMG, which already had earnings, and we see that earnings were favorable, judging by the response from the market. No big run here, but we are definitely in an upward trend in this stock, as it waited for earnings to see whether it was going to move or not. Had a nice little move for the week, and favorably reacted to earnings with a 1.4% rise in CMG after it told us what it did. All right, next let's take a look at Google, also coming into earnings, which are taking place, took place on the 19th. And we see that Google responding nicely during the week, popped out of that previous trading zone. The next resistance at that 200-day moving average. Google not the performer that it was since it announced its stock split and has a shareholder lawsuit currently taking place. So if the market pulls back, we could expect that Google will pull back, as we have seen so far no great move out of earnings, as the earnings came out last night. Watch that first hour high-low with Google to determine what direction it's going to take on this options expiration day in the month of July. ISRG, our medical company, a nice little steady uptick as the market pulled up, but didn't even reach its previous high from a couple weeks ago. And earnings on this one are they probably took place after the market closed, and we'll be able to check that one this morning. All right, next let's take a look at MasterCard. Pullback in MasterCard after it had shown a nice little gap up, but a big strong, almost went all the way up to 450, giving us a new high at the beginning of the week, and it's kind of tapered back, heading back towards those moving averages. Notice on MasterCard we do have the kind of pattern we like to see on our moving averages, where there's the 200 and the 50 is above the 200 and the 30 is above the 200, as we see us having a standard upward trending movement in the moving averages with MasterCard. All right, earnings on that are August 1st. Next, let's take a look at McDonald's, and we see McDonald's has had a nice little run into earnings. Earnings coming up on the 23rd this next week, and if the market does pull up and continue its upward trend, giving us higher highs, you can expect we're going to break out of this training zone on McDonald's, as it has had a nice little earnings run, consistently showing us a nice little upward move. All right, McDonald's, certainly a nice stock to watch going into earnings July 23rd. Looking at Nike, we saw that Nike, which had earnings, obviously disappointed, trying to work its way out of the basement, but it hasn't made it to the top floors of the department stores at the moment with the way that the stock looks. Trying to close this gap, should very likely do that. As it does that, it'll be right there at about the 50-day moving average. Watch for a move to the downside, as Nike is not showing us that previous strength that it did last year. All right, looking at Priceline, we see that Priceline trading well within its trading zone. Not showing us a lot of the great strength that it used to show us, as it would run strongly into earnings. Earnings coming on August 2nd, so watch for a reversal as we're getting near the top of the zone. If the market pulls back, we could expect Priceline to do exactly the same thing. Looking at W.W. Grainger, say breakout. Say I loved earnings, because that's exactly what we saw. As we saw huge volume, huge candlestick, as W.W. Grainger showed companies what it means on Wall Street when you do what you're supposed to do. So, can earnings change the look of a stock? You bet it can. Watch for a pullback, maybe 50% of the candlestick, and then watch for new highs coming out of W.W. Grainger, as it showed that it can be a market leader. W.W. Grainger, certainly a stock to watch on the bullish side. With any move in the market, it should help lead us up. With that, that's the week that was in the market in the summer doldrum months, with July being one of the stronger months of the summer, as it's the beginning of the next quarter, and first month of the quarter tend to be strong bullish months. That's what we're seeing so far out of July. So with that thought, this is Butch Shorak. It's Options University. It's Friday, July 20th, 2012. Lobster season is upon us, and have a great weekend.